In this video, I'll be reviewing whole life versus term life. So let's get started. Now, first of all, we're going to be looking at whole life. So let me just go ahead and write it down. Whole life. All right, perfect. Now, whole life insurance is a type of permanent life insurance that provides coverage for your entire lifetime as long as premiums are paid. Unlike term life insurance, it has a cash value component that grows over time, offering a combination of protection and a financial savings tool. This makes it suitable for those seeking both lifetime security and a way to build wealth. Now we're gonna go ahead and look at the pros of whole life, and then we're gonna look at the cons. Alright, so the first pro that we have is guaranteed lifetime coverage. So, lifetime coverage. So, whole life insurance remains in effect as long as premiums are paid, ensuring your loved ones receive a death benefit no matter when you pass away. This can be particularly appealing for those concerned about leaving a financial legacy or covering end of life expenses. Then we have cash value growth. Cash value growth. So a portion of your premium goes into a savings component that grows tax deferred over time. This cash value can be borrowed against or withdrawn, providing financial flexibility for emergencies or major expenses. Then we have stable fixed premiums. Fixed premiums. So premiums remain consistent throughout the life of the policy, making it easier to budget for long-term financial planning without worrying about rate increases. Now that is it for the pros. Now we're gonna go ahead and look at the cons. All right. So the first con that we have is high initial costs. High initial costs. So whole life premiums are significantly higher than term life for the same death benefits. This may strain budgets, especially for younger families or individuals starting their career. Then we have slower investment growth. Slower investment growth. So while the cash value grows steadily, the rate of return is often much lower than what you could earn through traditional investments like stocks, mutual funds, or retirement accounts. Lastly, we have complex and inflexible. Complex and inflexible. So whole life insurance policies can be complicated with various riders and options. Additionally, making changes to coverage or premiums later on can be difficult and may involve penalties. Now, that is it for whole life insurance. Now, we're going to go ahead and look at term life insurance. So, term life insurance provides straightforward temporary coverage for a specified period, such as 10, 20, or 30 years. It is designed to provide financial protection during key life stages like raising children, paying off a mortgage, or building a nest egg. Unlike whole life, it does not accumulate cash value, making it purely a risk management tool. Now we're going to go ahead and look at the pros of term life. So, pros. The first pro that we have is affordable coverage. So, affordable. Now, term life insurance is the most cost-effective way to secure a high level of coverage. For young, healthy individuals, premiums are often just a fraction of those for whole life, making it accessible to most families. Then we have flexibility in coverage periods. So, flexibility. Now, you can choose a term that matches your financial needs, such as a 20-year policy to cover the years until your children become financially independent. This ensures you're only paying for the coverage when it's most needed. Lastly, we have high coverage for low cost. So, high coverage for low cost. So, because term policies focus solely on providing a death benefit without the added expense of a savings component, you can afford a much larger payout for your beneficiaries compared to whole life. Now, that is it for the pros. Now, we're going to go ahead and look at the cons. The first con that we have is temporary nature. So, temporary nature. So once the term expires, coverage ends unless you renew it, which can become very expensive. If your health deteriorates during the term, securing new coverage might be challenging or unaffordable. Then we have no cash value or return. No cash value or return. So unlike whole life, term life insurance doesn't build any savings or investments value. If you outlive the policy, the money you paid in premiums is gone with no financial return. Lastly, we have premiums increase with renewal. So premiums increase with renewal. Okay, now renewing a term policy after it expires typically comes with much higher premiums due to your older age and potential health issues. This makes it less viable for long-term coverage. Now that is it on the comparison between whole life and term life. Now obviously based on these pros and cons, you're free to decide whatever is more beneficial for you. So that'll be it for the review. I hope this video helped you out and I'll be seeing you guys next time. Peace out.